The banking industry in China is still very nascent. And if you look at the modern banking industry, it really just started in the late 70s as part of the Great Opening. Right now, what we're seeing is an incredible period of reform, starting with China entering the WTO in 2001. The government and the regulators have been on a path of ambitious reform over the past decade and a half, really opening up the financial industry and modernizing it. Over the history of the banking industry in China, the government-controlled or the state-owned banks had played a critical role. And indeed, when the first banks were set up in China, they were wholly state-owned enterprises. Over the course of the 2000s, we saw more and more of the banks list publicly, both here in Hong Kong and in Shanghai. Still, with these banks being listed, they still have a significant portion of their ownership that's with the government. So of the current banks today, all of the banks have at least 15% government ownership, with the exception of Mincheng Bank, that is a private bank. What's happening now in the industry is the government and the regulators are pushing to open the industry even more to other banks. So we saw in the early 2000s, we saw the banking industry open up to foreign players. So you had banks like HSBC, Citibank, DBS that came into the market and started offering products and services. They initially were very limited in what they could do. They were providing dollar services, US dollar services, euro, British pound. It was only over time that they started offering renminbi services, and they were allowed to by the regulators and by the government. Now what we're seeing is the government opening private banks. And so these banks are completely privately owned and separate from the government. The intention with this is to open the industry more and alleviate some of the pressure that small medium enterprises in China are facing, because it's very difficult as a small medium enterprise to get funding and access to credit in China. So these new private banks that are coming onto the market and being opened, their focus is largely on this small medium enterprise segment, which is an area that's struggled in the past. Right now, it's a very difficult time to be a bank in mainland China. If you look at the industry right now with liberalizing interest rates, Chinese banks were some of the most profitable banks around the world. Why was that? Well, mainly because the interest rates were fixed. So they knew that they could lend out money at a certain rate and they could pay deposits at a certain rate. So it was a very fixed margin that they were getting on all of their assets and liabilities. What's happened now is that the interest rate is liberalizing. So we're seeing the amount that they have to pay on deposits is increasing. And we're seeing external competition come into the market now for banks. So you see asset management products and services like Alibaba's Yuebao, that's part of the Alipay platform. Previously, last year, people could get 6 or 7% return on the Yuebao platform, which at the time was nearly double what you could get for a standard deposit at a Chinese bank. So you have this situation where the rates are liberalizing, so the bank's profits and margins are decreasing, but at the same time you have these other players coming to market and offering other products and services that, whilst that money is eventually getting back to the banks, because a lot of those are based on negotiated deposits, so it's not like the banks are losing that deposit base. But what is happening is their cost of capital is increasing and the cost of those loans is increasing. So that margin that they were able to rely on for so many years in the past is decreasing as competition gets stronger in mainland. The regulators aren't doing much to ease the pain, actually. I think the opening up of the market, if you look at the interest rates liberalizing, if you look at private banks coming to market, if you look at the third-party payment companies, the regulator in certain cases has taken a step back. So if you look at peer-to-peer lending in China, the regulator hasn't brought regulations to market around that yet, although it will happen in 2015. Why haven't they done that? Well, because that's helping the industry. Because shadow lending is a huge issue in China, and peer-to-peer lending platforms don't get rid of this kind of off-balance sheet lending, but they do electronify it. So it's much more traceable, and the government can control it a little bit more than they could previously. So we're starting to see this a little bit more where other platforms are coming in to play in the market.